watching Countdown right here on Bloomberg. Quint, the falling crude oil prices have not managed to bring cheer to the equity markets this time around. Not so much so for the benchmark indices, but the broader markets are doing fairly okay. We'll talk about all of that and more in just a few moments, but let's quickly run through the headlines. Markets continue to decline for the second straight day in a row. The Nifty trades below the 10,600 mark. Nifty IT is the top sectoral loser. Dr. Reddy's is the top gainer on the Nifty after the US court allowed the launch of the generic version of Suboxone in the US. The stock has been seeing its biggest intraday jump in over a year. UPL is also among the top gainers on the Nifty after it signed a definitive agreement to acquire 100% shares of a company based in Costa Rica. And oil marketing companies are off the day's highs after registering strong gains post the fall in crude oil prices. Good afternoon, Neeraj. Yesterday's session was a little bit of a disappointment, and that seems to have carried forward into today's trade.
Yeah, but we are off the lows of the day, which is actually a good sign, Devina, to be honest. About 0.7% right now for the Sensex. We are down almost 1% for the Sensex. The Nifty is a good barometer too, by the way. Any of the charts would look identical, frankly, because we were at the lows of the day somewhere there and out here, and now we are off the lows of the day. And led predominantly by the banks. Look at the Bank Nifty, and that's got a strong color of green to itself. So good show by the Nifty Bank in the session today. I doubt that the market breadth would be looking terribly exciting, but even Stevens, so it's not all bad. We've recovered on the market breadth as well. Devina will speak about all the mid caps and small caps, and I'm sure Agam will come in and talk about the liquid universe. But let me focus on the heat map and just get that up and tell you what's moved and what's not on the index. So IT's clearly been that big bugbear in the session today. Nifty IT down about 3%. So TCS, Infi, HCL Tech, Techem, all of them have corrected and corrected strongly. Reliance Industries down about 2.5%. So that's a heavyweight that is putting a little bit of pressure on the index as well. But even Stevens on the breadth on the Nifty. What's done well throughout the trading day today? I think Dr. Reddy's has stayed rock steady. So about 7% higher, and it's been maintaining these levels. I don't think it's come down even slightly from those 7% odd gains, at least, if not more. Some strength in the OMCs, but I must say they've cooled off a little bit from the highs of the day. So HPCL, IOC, etc. have not done too badly for themselves, and some continuation of gains as a result of what's happened to Dr. Reddy's into stocks like Sun Pharma and a couple of other large cap pharma names. But Dr. Reddy's on the gaining side, IT on the other side, on the losing side, and all marketing companies somewhere out there, not quite at the highs of the day, but still doing okay. What about the mid caps, Devina?
Well, the mid caps are having a relatively better day, Neeraj, and Sans IT, which even in the mid cap space seems to be bearing the brunt of it. There are quite a few names which are active in in the positive territory this time around. So just quickly run through the impact that the fall in crude oil prices is having on a few sectors. And to start off with, first, aviation names like Jet Airways and Interglobe Aviation. Both these names are looking fairly active. Jet Airways now up about 5.5%, with Interglobe showing you gains of 2%. Berger Paints, on the other hand, in the paint space, again another key beneficiary of crude oil price coming off, is seeing some interest, followed by Kansai and Nerolac. That is buzzing on the back of good volumes as well. Other gainers in the broader universe include the likes of a Vodafone Idea, which have got about gains of closer to 6%. Minda Corp has gained 8% in trade. Volume buzzers, you've got Rupa and Company, which has traded 3 lakh shares, but don't go by the absolute value, because if you see the volumes, it's spurted significantly, in fact more than 10 times the last 20-day average. ITI is the other one that you should watch out for. 74 lakh shares have been traded on the stock, 4% gains after yesterday's 12-13% gain that it's already witnessed. IRB Infrastructure, 20 lakh shares have been traded on the back of a 4% increment in prices. Some losers then, and Radico Khaitan is the one stock that's declined about 4.5%. Emphasis continues its losing streak in the backdrop of what IT has been doing. Nonetheless, this drop in Emphasis has been pretty sharp from levels of 1200 to about 880 now. And Jindal Stainless is the other one that loses out in trade today, about 5% given up. But let's talk about the more liquid universe, what's been happening in the derivative market. We've got Agam joining in right now to take us through some cues out there. Agam, good afternoon.
Good afternoon, Devina. Well, about another 0.5% cut on the benchmark indices, and well, a retracement for the benchmarks. The Nifty now below 10,600 once again. More accumulation in open interest of as much as 3% now for the Nifty. The Nifty banking futures also seeing more increase in open interest. It's almost 17% there, but this is towards the longs. So considering the banking index has been trending higher since the start of the session. Now the VIX, of course, well, it's moved higher once again, but but it isn't as high. It's still around 19.4. And moving on to your, open interest distribution, again, not too much to speak for. It's largely the same levels, though we have seen a lot more activity today around the 10,700 mark. And speaking of the most active options, that is likely where we're seeing more writing. It's the 10,700. There you have it. That's on your screen there. And also more writing in the 10,600 calls. So based on today's activity, traders are expecting the Nifty to close below 10,600. Whether or not that happens, well, in an hour we will know. But moving on to stocks, the IT index is in focus, and NIT Technologies is right there with respect to shorts building, more shorts building in fact, about an 18% increase there. If you remove NIT Technologies, what else is really seeing a considerable increase in open interest is Apollo Tyres. While the underlying isn't making too much of a move, we are seeing 17% increase there. And OBC is something that I have been pointing out, at least from the futures and options space, because we are seeing more advances, and it's been on an uptrend for 2 weeks now, and there's been accumulation of OI here as well towards longs. But on the whole, it's been a mixed day of trade for the broader markets, and well, of course, benchmark indices are currently trending lower.
All right, Agam, thanks very much for that. That's the more liquid universe and what's been happening in the futures and options space. Keep an eye out on Divan Housing Finance, the company reporting its Q2 numbers. Significant growth seen in the profit numbers, almost 50 to 53% higher at about 438.7 crores versus 287.7 crores. Revenues also seeing an increment of closer to 33%. 3,515 crores on the revenue front, and the market is clearly enthused by these numbers at the current point. So optically the numbers look really good, and the market has given it a thumbs up to that tune. Remember, ahead of numbers, it was fairly skeptical as to what would come out for Divan Housing Finance regarding the kind of pain points that have already been discussed broadly. 234 on the stock price. I believe there should be, a tax number also, which has been increased this time around. I think 194 odd crores versus about 109 odd crores. So despite of an increment in tax, you are seeing the profit numbers look fairly strong. I wonder if there's other income component to this or no, but revenues have grown steadily, 33 odd percent. Profits have come in at about 52 odd percent increment, and the stock has moved up 5%.
Yeah, I mean, you can't fault these set of numbers, and maybe that's why the markets are really reacting. But remember, I think the other bit for a Divan also is that the commercial paper rollovers thus far for the space at large have looked fairly comforting. Maybe that is also playing in. But the numbers by themselves look okay, 5% higher. No fault that we can see as of now. We'll just try and get some of the other details going from the Bombay Stock Exchange website as well. But from the looks of it, there isn't any kind of an issue with at least the basic numbers. Maybe the management commentary on what would happen going ahead would be important to monitor as well. For now, 5.5% higher for DHFL. Remember, a bit later on, we'll ask our guests about whether or not they are happy with these numbers and whether they would consider buying into a Divan, if not from a investment perspective, then from a trade perspective. The stock is looking rock solid, as I said. Nevertheless, that's one set of numbers that have come out. A bunch of other stocks in news, but I think let's take a look at what's buzzing in trade today. Sharad Dubey will be joining us in just moments from now with that list, and then we'll get in Darshan to talk about what is the brokerage verdict on Dr. Reddy's. But Sharad, let's start off with you first. Aside of Divan Housing, which is buzzing now as we speak, what else has taken center stage?
Well, Neeraj, the first stock I've picked up is definitely Minda Corp, which has gone up by almost 8%, its highest levels in a month. So basically, the company has reduced its stake in its Japanese joint venture with Furukawa Group. So they have reduced the stake from around 51% to 25% stake. The second stock which I have picked up is SpiceJet, which is up by almost 6%, rising for the second successive session. So basically, the Federation of Indian Airlines sent letter to Indian Aviation Ministry asking the government to obtain unsecured credit for OMCs and airports. This will be a reduction in the crude oil burden. The third stock which I have picked up is Premier Explosives, which is up by almost 16% today, and it is seen at the highest levels in 16 weeks. Basically, the company has acquired arms license to manufacture propellant, ammonium perchlorate, and HTPB. Back to you.
Watch out for this as well. Premier Explosives. Interestingly, if I'm not wrong, the stock was up in trade yesterday as well. I think the announcement, one of the announcements came in yesterday. I think the stock was up in yesterday's trade too, if I'm not wrong, and up another 15% in today's trade. If we can get this week's chart for Premier Explosives, unless I'm very wrong, it reacted a bit yesterday, and let's just see if it's reacting in the session today. It should come up 31.84% for Premier Explosives, and the last couple of days have been okay. Actually, it gained on Monday. It was a bit flat on Tuesday, and now has gained on Wednesday as well. Okay, the other one, and just before we hear out a very important market voice, global market voice, I must say there are two actually coming up. But the other one is Dr. Reddy's, and as we stated at the start of the show, it stayed rock steady above the 7% level. It's not budged. It's not come off quite dramatically at all from these numbers. Now, what's happened, or what's the development that's happened? The US Court of Appeals has said that Dr. Reddy's can resume the commercial launch in the United States region of Suboxone. Remember that blocked sale in July due to litigation, and this was, Devina, a known event that would have happened, because I mean, we knew about this, that the Dr. Reddy's stock would react positively, because yesterday when this news announcement came out, Indivior cracked almost 41 or 42%, right? So this was a known news that Dr. Reddy's will react positively. But very interestingly, the numbers, I mean, 2 days when they had the chance to launch it about 4 or 5 months ago, they clocked in sales of about $20 to $25 million. Yeah. And therefore, the opportunity size is very large. Yeah. So, you know, if you remember, Neeraj, we spoke to Profit Bora in the morning, and he said that while they did that in those 2 days, it was an at-risk launch, knowing that if at all, you know, the innovator company, you know, appeals against it, then they may have to stop sales, which happened. So they sort of filled up all the channels with almost 1 month worth of stock and inventory. So that probably would not be a true representation of how much they can probably sell, even if they're allowed to sell now once they you know, start pumping the market. And not just that. So it's not just Dr. Reddy's that can start selling it. Some of its other competitors also will once again step into the market. And whether the opportunity remains to be as big for Dr. Reddy's, or whether the next year numbers have already been baked in for Dr. Reddy's, which most of them have, obviously it is a big kicker, but also you have to, you know, watch out for what happens to the other two drugs, which is Copaxone also, which will be the other indicator as to what happens for the overall sales number. So, but 50 million to 60 million is something that everyone is pretty much factoring in. Yeah, and brokerages have been sanguine about this by and large. So, yeah, I mean, I think Devina summed it up, but that's essentially the math around it. But the stock has reacted positively and stayed stable. In fact, let's talk about that. Let's talk about Diwan Housing and a whole host of other crude beneficiaries as well. Good time to get in. Pankaj Pandey of ICICI Direct joins us right now on the show. Pankaj, good having you. Thanks much for joining in. You know, we were talking about Dr. Reddy, so let's start off with that, and then I would maybe want you to react to the numbers of Diwan Housing as well. But what do you do with the big boy in the pharma space? Reacted positively today on expected lines. Is there more merit in investing in Dr. Reddy's, depending on where you believe the earnings cycle is currently for the stock?
Hi, good afternoon, Neeraj. On entire pharma space, if you look at, this has been a slightly softer quarter. However, domestically, if you look at, things were quite bright. So for a company like Abbott, I think even on a higher base, the company delivered good set of numbers. Now for Dr. Reddy, I think this win opens up an opportunity of about 60 to 70 million dollars. That is what our estimate is. Given the fact that there could be taking into account 25% market share and about 60% price erosion. But overall, if you look at Dr. Reddy's for the second half, the company has guided well, and I think what has happened in case of DRL is that while there has been pricing pressure there, but the company has been taking effective measures in terms of controlling their cost, and which is why their margins have been maintained, unlike some of the other peers like Lupin. So from that perspective, and over the next 1 or 2 years, I think the company is going to selectively launch products going forward, and with cost optimization, we would expect margins to be maintained. And which is why I think we had a buy rating on the stock. There's been a decent amount of run up today, but I think overall things are turning positive for some of the US based companies. So besides Dr. Reddy's, we like Aurobindo and Divi's as well.
Just to dwell on that a bit more, most have already said that next year's numbers are baked into Dr. Reddy already, at least for Suboxone. So now for Copaxone and Nuvaring, that's going to be another crucial kicker for the stock to see the next level of growth?
I'm sorry, I don't have that kind of a granular detail to sort of talk. I think my pharma analyst would have a better sense on it.
Okay. Nonetheless, what are we doing in terms of specific sectors now, particularly looking at where crude oil is and sectors specific to being beneficiaries of the cool-off in crude oil prices, be it paints, be it the oil marketing companies, be it aviation?
So I think, see, if you look at, in case of aviation, we don't have a coverage on the entire pack, but largely for aviation, I think there's a big positive given the fact that the crude oil prices have declined substantially in the recent past. But we also see structural headwinds also, because if you look at most of your tier 1 airports are running almost at full capacity. Now, the only option for airlines to grow is to increase or to adopt or to put a higher size of aircraft with higher seat numbers. Otherwise, another challenge could be that somewhere down the line, the government will have to look at auctioning the slots, which is what is a practice followed globally. So that could pose a structural challenge. So aviation, we're not really chasing a big way. I think in the case of oil marketing companies also, the challenge is one has to take a view on crude, which again is very volatile. Otherwise, from a demand perspective, the demand is still in single digits. These companies are trading at about 8-9 multiples. So from an investor perspective, I don't see much of a merit in terms of chasing these companies. I think the only segment one has to look at is, like you said, for example, some of the other beneficiaries like paint segments or the consumer durable segments. I think that is where we have seen some of the commodities sort of correcting. And if you look at the margin expansion for these paint companies was substantially higher, and because of higher crude oil prices, last 2 or 3 quarters, these companies have been reporting margin pressure. Otherwise, volume growth, especially in case of paint companies, was in double digits. So once the crude oil correction, since the crude oil has corrected, so we would expect that somewhere down the line, the margin pressure will go off, and margins could expand going forward. And I think that is where people can look at tapping the stocks. So again, Consignor Relic or Asian Paints, I think should do good going forward.
Okay. Pankaj, the numbers of Diwan Housing Finance just came out, and they reported what looked like a fairly decent quarter on the revenues and the other parameters. Is an investment in that stock a factor of the numbers, or would it be a factor of a lot of other events? And if so, even if the numbers have looked good and the stock has reacted positively, what would your verdict be as a house on Diwan Housing?
So nearest Diwan Housing, we don't have a coverage on. We have a very limited coverage on the overall NBFC as a space. I think the only stock which we like in NBFC is Bajaj Finance, wherein I think we have a decent amount of comfort that the company will keep growing at 30% given the opportunity it has been chasing. And I think they really do not face any asset liability challenges, and for them, since it is AAA rated, the cost of funding is also not is relatively better compared to the other NBFCs. So I think that is the only pick probably one can look at. I think Diwan Housing, I really do not have a view, and we have not been sort of trying to meet the management also.
Okay. You have a call on, I believe, a few banks. You want to run us through them?
So in this overall current scenario, I think corporate heavy banks should do well. So primarily 2 banks is what we like. One of them is Axis Bank and the other one is State Bank of India. Now, for State Bank of India, I think earlier the challenge was they had to provide for extra manpower cost, plus do the provisioning for the gross NPAs which they had to take because of the merger with subsidiaries, and that resulted to the underperformance. But the reason why we like this bank is that if you look at, they've got a good CASA ratio of about 44%. Their CD ratio is one of the lowest at 74%. So which means that they can shift a lot amount of low yielding investment into higher yielding advances going forward, and that should sort of help them to expand their margins. And so they would be the biggest beneficiaries of shift in business from NBFCs to banks. So which is why we prefer this bank, and also the asset quality concerns are sort of are fading off. So it's trading at about 1 time adjusted book value, and we believe that it will be re-rated, and wherein we have a target price of 340 on the bank. On Axis Bank also, I think the asset quality was the primary concern. If you look at until FY16, they had the gross NPAs of 1%, which zoomed to about 7%. Now, what we expect is that slippage is what we have seen in the first half is about 7,000 odd crores, compared to about 34,000 odd crores what we had seen earlier. So that had a good amount of impact on their bottom line. So the bottom line nearly declined by 90 odd % in FY18. Now we expect a good spike in the profitability given the fact that the retail is now driving their overall growth. So retail as a segment is now contributing about 48% of the advances, and the corporate, which was about 54 odd % for 5 years back, is now down to about 38 odd %. So it's a fairly secured kind of a growth what this bank is delivering. And with a change in management, with stable growth, especially driven from the retail segment, I think we would expect this bank also to sort of get re-rated, wherein we have a target price of 725 on this bank.
Okay. One last question, Pankaj, and that's on divvies. The stock is virtually trading at fresh highs. Would you be comfortable making a fresh investment here?
So, Neeraj, if you look at DVs, I think you're right, the stock has done well. It's up about 30 odd % in the last 3 months. And see, the only reason why we like this stock is that so in the last 2-3 years, the company had done a capex of about 1,000 odd crores. Now what the company has guided is a capex of about 1,500 odd crores. That is largely to address the demand which is coming from the supply constraints, which some of the global companies are facing from the Chinese market. And even in the recent quarter, the capacity utilization levels were quite good. So company is doing a bigger capex than what we had seen earlier in the past 2-3 years. Besides that, if you look at both their segments are doing absolutely fine. So you look at CRAMS, their overall growth rate has been about 23-24 odd %. That is what we expect over the next 2-3 years. They're working for some of the top 20 global companies. We don't see much of a challenge given the fact that the company has been adhering to IP in a strictest manner. On the CRAM side, like I said, because of this capex, we would expect that this business also will keep growing at about 24-25 odd %. So overall growth would be about 24-25 odd %. And with some bit of a margin expansion, the bottom line growth is expected to be pretty robust at 40% CAGR. So, which is extremely good, even though the fact that the company is trading at slightly expensive compared to the other tiers in the space. But even with this kind of a price performance, I think the trajectory for this company remains robust.
All right. We'll leave it at that, Pankaj. Thanks very much for joining us. Really appreciate you could take out the time and speak with us.
Thank you so much.
All right. Let's now get you a market voice. In fact, talk about the Morgan Stanley CEO, James Gorman, saying that he is not concerned about the recent sell-off in the US markets or his bank's ability to handle the recent volatility. He was in conversation in an exclusive interview with Bloomberg News. Hear out a bit of that conversation.
It's not the dot-com bubble burst of 2000. It's not when I first came to the US. I was coming out of graduate school in 1987. I mean, listen, this is a market correction that we're going through right now. I'm sure we'll talk about in detail. But no, this is well within our wheelhouse of what we can handle.
Is it a healthy shakeout, this correction, this contraction of multiples in the broader market and what we've seen happen to tech stocks in the last few days?
Well, I think if you step back from it, what's going on? Firstly, we're in a tightening process around the world, led by the US. 3 and probably 4 rate increases this year. That has consequences. The ability of the monetary authorities, given their shrinking balance sheets, also has limitations of what they can do. And we've got a lot of political turmoil. So it's not surprising the markets have been anxious. It's not surprising you're seeing some correction. Against that backdrop, within certain sectors, the FANG stocks, incredible run-up in valuation this year. Hundreds of billions of dollars of value created in some of these companies this year. It's not surprising some of that's been taken off the table.
Well, there is a lot of debate, and I guess the debate is reflected in the volatility that we see over a number of the things that you just itemized.
Sure.
The sustainability of U.S. growth, for example, the pace of rate increases, and the magnitude of rate increases, the implications of this standoff that the administration is undertaking with China, for example. Is there any consistency around that debate as far as what you hear from clients?
Well, I think that the most important thing to take away is there's just a lot going on. I mean, you think about it. Every morning you get up right now, and there's a strong news flow from overnight. Brexit, tariffs, political risk, protectionism, anti-immigration. All of the.
You're right. It's a much longer list.
Before we get to the markets, right? Before you get to China, before you get what's going on in the Middle East, before you get to the sanctions in Russia, before you get to the war in Syria, before you get to North Korea and are they still testing or not testing, it is a lot for investors to absorb. When investors are confronted with that against a backdrop of, on the one hand, very strong economic fundamentals, on the other hand, tightening and clearly some corporate credit, let's just say where the corporate credit boat is full, right? So clearly issues around triple B credit. So you've got this combination. It's not surprising the markets are anxious. This is what markets do when they deal with uncertainty. They get anxious. In the short term, sometimes they get it very, very wrong. In the long term, the market always is right.
Well, long term, the market is always right. Let's figure out what the long term could be like and what the series of short terms in the build up to the long term could be like as well. A very prominent market voice, Mark Matthews of Bank Julius Baer, with us right now on the show. And Mark, so good having you. Thank you so much for joining us on Bloomberg Quint yet again. It's always a pleasure having you. Frankly, the reason for seeking your opinion today was very simple. Thus far, Indian markets have been under a cloud of higher crude prices and worsening macro. The last 15 days have seen the reversal of sorts, with crude correcting sharply and the rupee appreciating as well. But now we have the boogie of the global market starting to correct. How do you think a market like India behaves in such a scenario, or maybe emerging markets behave in such a scenario?
Well, I think you set it up very nicely, and by the way, I'm honored to be here. And I have no crystal ball, but I can just tell you that I do think the big question revolves around interest rates, and they will determine where the U.S. market goes, and in turn where the dollar goes, and therefore most of the rest of the world. And for that, it's very difficult to say, because on the one hand, you do have this severe correction in U.S. share prices, which the Fed, at least some of the Fed officials, must be worried that they are going to be blamed for this. So we won't be surprised by a December meeting hike when that comes, but the wordage coming out of the December meeting will be very closely watched, and of course all the wordage up to it, to see if anybody in the Fed is going to become a little less hawkish. And when we look at the dot plot, there seems to be a big division within the Fed about how many times to raise interest rates next year. Some people say 2, some people say 4. And the street, there's a similar divergence. So the answer to the question, I think, is primarily around rates. And I would just say that our house view is that the Fed ultimately will respond less to political pressure, more to the economy. The U.S. economy is strong. We're still looking for 1 rate hike this year and another 4 next year, which means a stronger dollar, which means that although we have seen a very nice rally in emerging markets, including India, it's difficult to say that it has a lot of legs, given what I just told you.
Okay. So let's try and set up this picture. And you know, I want to pull up a chart which was used in the morning as well on Bloomberg Quint. And that's the difference between the spreads between the US Treasury yields versus what the corporate credit returns are, or the yields are as well, rates are as well. And that's widened to almost 2-year highs. Mark, about 4 months ago, almost everybody believed that maybe, just maybe, the Fed is underestimating the pace at which it would have to hike rates. Now, there are murmurs of there being an outside chance that the Fed might itself not go as briskly as it would because of the belief around the credit cycle too. Couple that with the fall in crude, which has a big macro impact on a market like India, do you think bears might be underestimating the pace at which reversals could come into select markets?
Well, I think yes, and I think once again you've set up this question wonderfully, because it's true that even Jerome Powell said last week that he does, among other things, look at markets, and the market he's looking at the most now is the credit market. You have had a big rise in the spread of corporate bond yields over treasuries. I might add, however, nowhere near the kind of rise that we saw in the financial crisis 10 years ago, in the Greek crisis, even in 2015. So yes, they're rising. I don't think they're really rising to levels that signal a lot of caution. But if they continue to rise at this pace, we'll get there. Then the other point you rightly touch on is that oil price coming down could take some of the, how should I say, the worries away that the inflation rate will continue to advance up a lot. But ultimately, you know, as much as the oil price and commodities are an important factor in inflation in the United States, another equally, if not more important factor is wage growth. And if you look at where the unemployment rate is and the pace of job creation, I think we should expect further wage growth, and that, I believe, would mean the Fed can't really ease off on its worries about inflation just yet.
All right. Mark, good afternoon to you. You know, you've highlighted the possibility of the strength in the dollar, which could curtail the excitement or the exuberance in emerging market equities and the follow-up in case we do see a good run-up from here on. What does this do for currencies thereof? Because once again, while earlier on we've been looking at our markets and talking about the Indian rupee versus the dollar weakening to levels of about 74, 75, it's come off very sharply from there. It's strengthened quite a bit. But whether or not, the constant strength in the dollar questions that as well.
Well, yes, it would. I mean, I think the rupee obviously is trading against the dollar, and so if the dollar continues to go up, the rupee will go down. I also really wonder if the oil price is going to continue to go down much further than where it is now. I mean, it's unprecedented that you get such a big loss in such a short period of time. But I guess relating to the currencies, I might just throw into the conversation Europe, because the euro is about 2/3 of the dollar index. And so we've got an important day today and tomorrow where the European Union will have to respond to Italy's budget. And what I'm just hearing this afternoon is, in fact, the Italians might be taking a step back on being so confrontational, which of course would be good for the euro and bad for the dollar. But we also have Theresa May meeting with Jean-Claude Juncker and some of the other big shots in the European Union today. And Brexit, I think, also remains a big thing, because the pound and the euro tend to trade in sync relative to dollar. So if you get more Brexit concerns mounting, then I don't think you should expect dollar weakness, put it that way. And I don't see the solution at hand in the Brexit situation. It's a very complex one, but as it stands now, the agreement that the Europeans want the British to accept basically keeps the British in the European Trade Union in perpetuity, and that's never going to fly as far as Parliament in the UK goes.
Mark, in light, if at all we do see the Indian rupee worsen from here on in regards to the dollar strength, and you know, for us as well, yields start to move higher, would the risk reward, I mean from a foreign investor, from a perspective of a foreign investor, lie more favorably in the bond market rather than the equity market?
Well, I think that the bond market in India has probably more value, if you just speak in broad terms, where it is priced now relative to history. The equity market is cheapened, but earnings have been revised down, whereas in bonds, what you're primarily interested in is getting paid your coupon and the health of the balance sheet. So net-net, I would agree with you that the bond market in India is more interesting than the equity market. But speaking of emerging markets, I mean, the thing is that their currencies were already so punished earlier this year that I think the asset class actually has probably bottomed out and will be gradually on the up and up over the next 12 months. Yeah, I would say that.
We've already seen a reflection of that in the month of November. Foreign money has been coming in, not just into the bond market, but in the equity markets as well. In the first half of November, almost more than $1 billion worth of funds have come into the Indian equity markets. Do you see that likely continuing? Do you see this as being favorable compared to if the interest rate tightening did progress at the pace at which the Fed anticipates it to progress? Then, you know, that will be a better investment than coming back to India and investing in the equities here.
Yes, I've noticed as well the significant foreign inflows and also the larger inflows in the month of October from local funds. And I wish I could give you an answer, but I honestly don't know the nature of that money as far as it pertains to India, whether it's short or long term, how much more is behind it. I just can't say, but I would guess that it's more short term in nature, given that we still have general elections 6 months in front of us, and the closer we get to that date, the more I would imagine people would want to hold back their investment in India until after the elections are over and done with.
Got that. Mark, thanks very much for joining us. Really appreciate you taking out the time this afternoon and sharing your thoughts and views with us right here on Bloomberg Quint. Mark Matthews there of Bank Julius Baer. Let's get to our markets then, and for the Nifty as well as the Sensex, we've somewhat gained some lost ground. Nifty at about 10,626 from just sub 10,600. Banks doing relatively well, closer to 1% higher for the Nifty Bank. Joining us now, we've got Ruchit Jain of Angel Broking as well as Gaurav Bissa of ICICI Securities. Gentlemen, good afternoon to both of you. Let's start off with the trade setup on the index. Ruchit, we'll start off with you.
Yeah, hi, very good afternoon. Well, on the index front, firstly, we had seen during this week the 10,800, which was the resistance range we had also discussed earlier. That acted as a resistance and market has corrected in last couple of trading sessions. But again today, the 20-day exponential moving average, which is around 10,550, now has become a support, as we have seen a pullback move today from the lower levels. So I think then in near term, this range of 10,550 to 10,800 could be seen till expiry, that is for next few trading sessions. So accordingly, we are advising to go long on Nifty futures at current levels, which is around 10,650, and simultaneously sell 2 lots of 10,800 call, which is because since 10,800 is a major resistance, we think that it won't be crossed in this expiry. So 10,800 call option 2 lots could be sold, which would fetch in premium of about 60 rupees, combined premium of 60 rupees. The stop loss on this strategy would be 10,550 on Nifty futures, whereas on the higher side, in case if you see this Nifty approaching the higher end around 10,750, 10,800, one can look to book profits over there.
Gaurav Bissa, what about you?
Good afternoon. Ruchit has already spoken about the crucial levels. I would just add that if you look at the option chain, 10,700 call option is combining a lot of OI concentration. It has been added today. I would play Nifty with option. I would recommend selling a 10,500 put option, which in case if Nifty consolidates to the current range, as what Ruchit mentioned, we are going to make money. If at all we see a bounce back in Nifty, even then we are going to make money. So I would recommend selling a 10,500 put for target of 20 rupees to 15 rupees, and we keep a stop loss of 60 rupees.
Okay, a few stock ideas then. Ruchit, let's start off with your calls on Apollo Hospital and Sun TV.
Yeah, so if we see positional charts of Apollo Hospital, then during last week the stock prices had given a breakout from its major resistance, and the breakout was supported by very good volumes. Last 2-3 trading sessions some retracement has been seen, but this just seemed to be a pullback move within an uptrend. So one should use this pullback as a buying opportunity. One can go long at current levels, keeping stop below 1180. We are expecting target around 1280 in next 1 to 2 weeks. And Sun TV is another stock which if I see the weekly charts, then the prices have been consolidating since last 1.5 months, and this entire consolidation phase has panned out above its weekly 200 moving average. So looking at the momentum readings, there is a high probability of the pullback from this support. One can go long since the risk reward ratio is favorable. 583 would be the stop loss on longs for short term, expecting target around 685.
Okay. And Gaurav, what about your stock recommendations for the afternoon?
The first recommendation would be buy on Voltas futures. We have seen good amount of consolidation coming in. We're not seeing aggressive long positions, but nevertheless we are seeing some call option buying happening in the name. One can play for a small target of 580, keep a small stop loss of 553. Second recommendation would be buy on Cipla futures. It has taken a strong support at level of 510. If you look at the daily as weekly chart, it's trading in upper sloping channel. The supports are which are placed around 510. So on that premise, one can keep a stop of 515 on the upside, targets of 540 can be seen.
Okay. Divan Housing should pull that up to see whether the stock has maintained that 5% gain post the numbers. 4% so not bad. 234 on the stock. Now that the results are out of the way, Ruchit, will you take a trade on Divan Housing?
Not really, because within this housing finance space, Divan Housing has been an underperformer after this sharp correction which we had seen in the month of September. Even if I just see the very short-term charts, then this entire calendar month of November, the prices have seen a consolidation phase, and the higher end of the consolidation is about 250 levels. So a lot of short positions although are there, but unless this 250 is crossed, I don't think there would be much short covering move in this stock. So in case if we see a breakout about 250, then only from a trading perspective I would look to enter in the stock. Otherwise I will tend to avoid.
Now, the other interesting aspect will be what happens to the IT space. The Nifty IT has corrected the 200-day moving averages after today's fall, but it's more a case of how much the Nifty IT is corrected over the last couple of months. Since end October, Nifty IT has come off at least 10% in September, So from the 28th of September or thereabouts until now, there has been a 13% correction in Nifty IT, led predominantly by stocks like TCS as well as Infosys. Those two are down about 16-17% over the last couple of months. In today's session too, they are amongst the principal leaders on the index and the Nifty IT both, 3.5% apiece for both of them. The question is, can there be a dead cat bounce or a retracement of sorts from these levels? Are they looking oversold? Gaurav, Bissa, that's the question. 17-18% for amongst the largest market caps in the country. Are they looking oversold by any stretch of imagination?
If you're talking of the index overall, then yes, there can be a bounce back that we can expect. It has an immediate support of level of 10,750, 10,800. If the current level is sustained, we can expect a bounce towards the level of 14,150 to 14,200. So yes, on that premise, I expect a bounce back coming in, but I would not play for a reversal. Something like Infosys, which gave a breakdown below the 200 DMA and saw a good amount of correction, it can again see a bounce back. But then again, I would not be too comfortable playing for a reversal sort of. But yes, there can be a bounce back. As you rightly mentioned, that can bounce, definitely possible. In a day or two, we can see a bounce in many of the IT names.
Okay, let's wait and watch if the bounce comes about in some of these names or no. In today's session, what else? The side of IT is weak. Bajaj Auto has arguably looked weak. And again, I don't know if it's the factor of the auto weakness or the currency strength or a mixture of both. because, well, Bajaj does export. The other one which has come off the last couple of days is Eicher Motors. It was northwards of 25,000 in day before yesterday's trade or an early morning trade yesterday, but it's lost 366 points today, and it's about 800, 900 points away from those levels. So there's been a bit of a correction, a course correction that has come into this name as well. So do watch out for this one. Just before we get in the next voice, a quick thought here. While we talk about IT by and large, Bajaj Auto on the charts, Ruchit?
I think the entire Nifty auto as a sector, if I see, then there are no positive signs seen as of now. Definitely in the two of the heavyweights, Bajaj Auto and Hero Motoco amongst the two-wheeler space, both have shown a negative momentum, wherein even RSI has given a negative crossover on the daily chart. So I think this space would relatively continue to underperform the broader markets.
Okay. Gentlemen, just stay on with us. Lots more to talk about, but let's hear out from one more prominent market voice. Oil marketing companies, airlines and utilities are on the buy list of Nirav Sheth of SBI Cap Securities. In a chat with us earlier on today, he explained why he's bullish on these sectors. Herein.
We messed up, right? And I think this is exactly like what happens at, you give in at the worst possible moment. That 1 rupee was uncalled for. In a sense that you could have done it without announcing it, right? Most of the election times you stop taking price increases, people assume that. This was seen to be going back on some sort of reforms. We are bullish on the stock simply because of the fact that even today you are looking at almost zero marketing margins in perpetuity, right? I have no doubt that irrespective of what is the election outcome, if you go 1 year out, I don't think that any new government is going to turn back on the reforms, right? It doesn't matter. People are used to it, consumers are used to it in terms of paying higher or lower, depending on what the oil prices does. Yeah, so these are all very great buys. I have no doubt about it.
Okay, from a positional or a long-term perspective,
I think now what the oil is doing, even from a medium-term perspective and even from a long-term perspective.
Okay, so tied into that question is a space that you very closely, and every time we talk about that, and that's aviation.
Right.
What does one do here now? We have an airline that is floundering,
right,
almost there. I mean, today's dailies are reporting about how pilots are calling in sick because they're not getting paid their dues.
Right.
What does that do to the other two? I mean, a conversation on jet is meaningless because there could be a corporate activity which would influence the stock price.
Right.
What about the other two?
Right. So my sense is that if you got a market leader with a 43% market share reporting significant amount of losses, it's time to buy into the industry. Right. So Indigo reports significant losses. Right. So it seems to us, at least at this point of time, that a part of that is strategic. In a sense that it understands that Jet is in trouble, it understands that SPY doesn't have a great balance sheet, and therefore it's time to ramp up the market share. Not a very great thing to do as far as I am concerned. Go back 20 years and look at initial readings of Michael Porter. You allow weak players to sustain. You don't push them so hard that they get into stronger hands, which is exactly what is happening.
Yeah.
You'll end up fighting Tatas and the Singapore Airlines. You're better off fighting Jet, right? So I think that too will change. And now you got benefit of lower oil prices. So most of them are going to make money. So I think that you will see some sort of a strategic pullback from what Indigo is doing, but probably the best time to buy into the stocks. And secondly, please appreciate the fact that oil has fallen so fast, right? That people have not been able to digest it.
Yeah.
Ideally, the aviation stocks and OMC stocks should have been higher by 30, 40, 50%. It has not happened because you're just trying to figure out, is it for real? Are you going to have a pullback? So I think it will take time for those things to sink in and you reassess how things are going to look like. So I like the space.
I just want to pull that chart up before Devina takes that next question. Nirav spoke about how quickly the pullback has happened in the chart, which we showed at about 8:45 or 8:50 a.m.
34 days.
Yeah, 147 days or thereabouts to climb to those 85 levels, and 34 days, just 34 days to come back to those levels. That's the speed that we're talking about.
Which really would require some amount of digestion right now. But Anirav, while we're talking about crude oil, I just want to shift to another pocket, which so far, the interest probably is there. Some of the stocks are fairly owned, but capital goods is a pocket now that we're seeing good numbers even coming in from the IIP numbers. If you take a look at the growth of capital goods within the IIP numbers, for FY19, almost 7.3% growth out there.
Sure.
Do you see that being a significant kicker and maybe a medium-term to a long-term story for names like an ABB, Thermax? What would you do here?
So I think that you are at the threshold of a big upturning cycle. So you're doing some work on utilities. So I mean, what necessarily matters is two sectors. It is oil and gas and it is utilities. Utilities by far is the largest, right? And large part of the problem that you're seeing right now is because you've got complete supply shock in terms of what is happening in utilities. So the load factors are at about 60%. But what you need is that you need power on peak hours, which is 2 hours in the morning, 2 hours in the evening. That is at 70%. Now that rises about 7-8%. That means that 4 years out, you'll hit about 78%, which means that you have to set up power plants today. If I need a capacity coming 4 years out, 5 years out, or else I have a severe supply shock in terms of power. Can you set up a capacity today? Absolutely no way. And there are no backward linkages, there are no forward linkages, right? Even if Reliance were to set up a power plant, there won't be any bank funding because you need to have contracts in place. And therefore, it tells you that you are sitting on a time bomb. If our hypothesis and analysis is right, you are going to see serious bidding for stressed power assets. It has started with Bhushan Power, but as you've seen more of these guys getting into NCLT, you are likely to see serious amount of bidding happening over there because you got an option of putting 7 crores for a greenfield. You take your cut, you bid at 2.5 crore, 3 crores, assume nothing happens in India for the next 1.5, 2 years, right? Build your financing cost into it, it's still a deadly deal. So, yeah, you probably about 6 months, 1 year in terms of people getting a sense in terms of how things are going to move.
So the depressed valuations right now should be a steal.
Absolutely. I'm bullish on utilities, and I think we are just some time away from getting into stocks like BHL and all that. You can probably try and time it, hopefully. But from here and 2 years out, 3 years out, these are the stocks that are going to make money for sure.
Well, do watch out for all of those pockets. As we speak, the equity markets have pulled back a little bit. The Nifty is now down only 0.4%. And the Nifty Bank, I think, is trading at the highest point of the day, 26292 and counting. So in or around the highest point of the day is the Nifty Bank in the session today. Yes Bank is up 3.5%. Axis is up 2.5%. SBI is up about 1.5%. So it's good going really for a bunch of these stocks. Before we move any further and get in our other guests, let's talk about the chart of the day. Now, cooling crude prices usually put a smile on the faces of all consumers, including aviation, fuel retailers, paint companies and tire makers. But this time around, it's the Indian airlines who've been stuck in a discount game that's seen the highest rise in the stock prices since crude prices started cooling off from the 3rd of October. So the cool off has presumably had the biggest beta for aviation. Sharad Dubey is standing by to tell us just how much. Sharad?
Yes, Neeraj. So the first thing is the crude has actually decreased by almost 25% from the highest peak levels of October 3, right from around $86 per barrel to around $63 per barrel. So now we see there are 3 sectors here. BPC, we are having 3 sectors: the oil marketing companies, the paint companies, the tire companies, and the aviation companies. So basically the OMCs have seen a gradual decrease in it, by BPCL cutting around 13% mark and HPCL marginally decreasing by 0.2%. For the paint sector, we see there has been an increase of around 6 to 13% for the 3 paint companies. Now if you look at the tire companies, the stock has increased by around 6% to 14% for MRF, Apollo and C8. But basically the most important sector which we are looking at is the aviation sector, which has increased by almost say 32% till 81%. So the jet has actually increased by 81% not only because of the fall in crude prices, but also with interest trying to acquire stake in the company. Back to you.
Thanks a lot for that, Sharad. And that's an interesting chart also because, I mean, even if you take Jet as an outlier and that's moved up for company-specific reasons, the other companies might also have got a little bit of tailwind there, yes, but aviation companies are the ones which have had the biggest gain. Now, you can argue that some of those gains are because of what's happening to Jet and otherwise, but just the numbers, the statistics seem to suggest that aviation has been the big winner since crude prices have started cooling off.
Well, whether or not we actually see that translate into something meaningful in terms of, for that matter, when we saw results, fuel cask for some of these aviation names didn't really put a smile to investors' faces, at least.
Maybe that will cool off.
So it needs to reflect in those numbers as well.
It'll also be probably a factor of what Nirav Sheth was saying. If indeed the price war on the tickets start getting pulled back a bit, and that might have a positive impact too. So, but let's wait and watch. The prices
and hopefully, if this translates into something meaningful for coming off of petrol and diesel prices, then those delayed purchases that people had held off so far in the auto space, in the four-wheeler space, whether or not that provides a kicker for them and they start to come back in because the cost of ownership starts to come off at least a little bit. That goes to be seen as well, if that turns out to be a positive.
Let's see. And let's talk about all of those, but in moments from now. But we do have Siddharth Sedani with us, so just taking one quick answer from him before we take that break. Siddharth, good having you. Thanks so much for joining in. We're talking about the aviation pack, jet notwithstanding, SpiceJet and Indigo. Do you have coverage? And with the crude price cool off, would you be bullish on either of these two names?
Good afternoon, Neeraj, and thank you for having me on the show. It's a very good news for the aviation space, crude cooling off, and don't think that crude has much legs to go higher from here, or for that matter, reaching to $80, $90 or $100. Looking at the situation, only one factor which may again boost up the crude is the demand in the month of December. Is just because of chill winter in the European and US. So overall perspective, of course, it's positive for the aviation space, but for investment perspective, I still would stay away. Although it's a dead cat bounce for all these companies, but overall perspective, I would still say for investment, or if I want to put across a finger on any of the stocks in the sector, then I would say relatively SpiceJet is better off because of the kind of regional connectivity under the scheme of Udan which they have. I think that is giving them the edge. Of course, the change of management is creating some operational efficiency which got wiped out because of crude and rupee for that matter. But overall perspective, relatively SpiceJet is good. And if you are really a savvy and an ace investor, then I would still say stay away from aviation in terms of investments are concerned.
So that's stay on. So much more to talk about. We need to slip into a very quick break. Up on the other side of the break, we tell you the Fab 4 stocks of the day, try and tell you what dealing groups are recommending, and of course some closing strategies. Needless to say, we'll also answer some of the social media queries that have come up on both YouTube as well as Twitter. Stay tuned.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. 29 minutes left to go for market closing. And for the index, we're still losing closer to 0.5%. The bank Nifty is cooled off a bit from the highs, but nonetheless in the green, 26,279 on the bank Nifty. Some queries that have been posted on our social media platforms, Twitter as well as YouTube. I'm going to start off with the first query that's coming in on Oberoi Realty. And Siddharth, I'll pose this question to you. The numbers were pretty good this quarter for quarter two. The stock did well post the numbers too. And within the real estate space, does this one make you feel relatively comfortable to make an investment in?
Yes, Devina, definitely it makes it comfortable to be invested in Oberoi Realty. Numbers were quite good and decent. In fact, if I talk about balance sheet, because when you talk about reality or real estate, the most important factor which comes into your mind is the balance sheet. Very few companies are having a good balance sheet, cash reserves in their books, and less of leverage. I think Oberoi, Godrej, these kind of players are in the list who has operational efficiency with themselves. Oberoi is a good company to be in, and I would say of late the rental incomes has improved for them in Oberoi Mall, which is based in Goregaon. I think overall perspective, this company sounds good in the reality pack.
Okay. Couple of chart checks that are required. Ruchit, a query that's come in is on Piramal Enterprises. How does it look from the short-term perspective?
I think if we see in the month of September and October, we had seen Piramal Enterprise had corrected very sharply up to 1800. A pullback move post that has been there in this calendar month, but it's now quite close to its resistance zone of 2400 to 2500. I think we can see about 100-150 upside from current levels, but no, I don't think there would be significant gains, at least in short term. So if any existing long positions are there, then whenever it comes in this range of 2400 to 2500, use that as an opportunity to exit from trading longs.
All right, Gaurav, Bissa, come to you with a query within the pharma space and whether or not that looks attractive enough post the recent correction in some of the names there. And what would be your pecking order?
If you talk about the entire pharma space, then I think it's trading near the crucial support levels of 9,300, 9,250. So it would be buy on dips candidate for me, pharma space for time being. And if you ask me the pecking order, for a momentum play, Biocon is looking quite interesting. If it sustains the level of 630, 635, one can expect it again going back towards the level of 680, 685. So that would be more of a momentum play. If somebody wants to play for a positional view, the safer bet would be Cipla, which I talked about in the beginning of the show. That would be also a good candidate, have a support of 510, and on the upside, 10% up move can be seen. Pretty more of a positional play. These two are looking quite interesting. If you want to have a high beta name, Wokartham on dips is looking good, but at these levels it can be quite risky. So I would not be too interested, but on dips it might be quite lucrative. But I would not be buying just about each and every name. One has to be a little bit careful. So these two are looking quite interesting, which one can build portion in these two names. Okay,
and some other queries as well, which we'll talk about. NTPC, there's some queries on Diwan housing as well. We'll talk about all of those. But first, time to dwell on the Fab 4 stocks of the day, and let's find out what's made it to Darshan Mehta's list of the Fab 4 stocks of the day. Darshan, relatively easier today than yesterday?
Yeah, it was. Lots of stocks that are doing well. No doubt that the Nifty is down in trade, but the Nifty Bank and the broader market is doing well. So if we can have the 4 stocks on the screen and we'll address them. The first one is Kansai Nerolac, and obviously how the way crude has behaved. A lot of Sharad did speak about all the sectors, but Kansai today is moving on decent volume, so that's doing well on the back of falling crude prices. It was down 6% overnight. Crude prices. The board meeting of Yes Bank has been advanced to December 13 to search for a successor to the bank, and that is why the counter is doing well in trade. Adani Gas, it's trading at a record high currently. It's just recently being listed, but nevertheless there is traction and it's moving up on high open interest build up. And the last stock is Dalmia Bharat. Cement as a pack is doing well. Cement prices have been hiked across certain of the northern states, and even the open interest build up in excess of 25% on Dalmia Bharat, that too on the long side, so that makes it among part of the top 4 today.
Oh, thanks a lot for that, Darshan. Adani Gas, interesting out there. What a big move for that one. Siddharth, Sedani, do you guys have coverage on the Adani Group stocks? Those 4 or 5, they tend to make some very strong moves. Adani Transmission up and about for the last few days. Adani Gas today up 20%. Enterprises has had a fairly decent run too. Do you track any of them fundamentally?
No, Neeraj, we don't track any of the Adani group of companies. In fact, if I would like to speak something on any of the stock, that would be Adani Ports, because historically been seeing the numbers has been coming for better for Adani Ports, and I think fundamentally looks little sound compared to others.
All right. Should once again bring up a Yes Bank just to take a look at the price point of the stock. 197 thereof. The stock has come back up closer to 190 odd was where it was trading at, I think yesterday or so. Made a level of about 205 from which it petered off about 7.5 odd percent. There's a range that Yes Bank is trading in over the last few days, and Ruchit, is that range something that you would want to play?
I think better than trading the range, wait for a breakout beyond the range, because Yes Bank amongst the private sector banking space has already been an underperformer in last 3-4 months. Now after the sharp correction which we had seen in the late September, the prices now have formed a triangular pattern, and usually you don't trade triangles from a short-term perspective. The breakout on the higher side is about 220. And on the low side is breakdown is below 170. So until this 170 to 220 we get a breakout beyond this range, I think one should not take any trading strategy over here. Let a breakout come either beyond 220 or below 170 for not to take any fresh trades.
Interesting. What about the banking space by and large, Gaurav? I mean, is there a bank trade that you would take? Maybe a trade on the Nifty Bank as well? What's the opinion there?
For Bank Nifty, the immediate hurdle is at levels of 26,320 to 340 spot levels. Today also we have seen a small pressure coming in exactly from those levels. For me, it would be more prudent to buy either on dips towards levels of 26,100 or you buy above the breakout levels of 26,320, 340. For now, it's stuck in the range. But one name that is looking a little bit interesting is Federal Bank. I would not recommend buying here, but in case if it sustains 83, it's just close to those levels. We can have a good breakout on daily or weekly charts, and we can then test levels of 88. So if Federal Bank sustains 83, it's a buy with the stop loss of 81, target of 88.
What about a Bandhan Bank? If you can give your view on that too. The stock's at 465. The last 1 month has gained closer to 12%. In the last 7 days of trade, the stock's moved up 10%. Is this something that you would like to take a play on? Gaurav?
If you look at Bandhan, it's seeing some pressure at levels of 500. It also has the 50 DMA place on those levels. And as long as it's trading below those levels, there's a good chance that it will keep on seeing pressure at higher levels. So for me, it's not a buy at these levels. One should buy only if it gives a close above 500, in which case the stop loss can be 490 and targets can be as high as 540 to 545. At 465, it's an avoid for me.
Look at Kesaram, 20% higher today. Some big moves there. Today, a lot of interesting mid-cap moves have happened. Gati is up about 11%, so strong moves there. And the last 2 or 3 sessions, Vodafone Idea, everybody believed it'll be down and out with the equity dilution that they've announced. But must say, went up about 18% in last Friday's trade, and then up another 5% today. If we can pull up the 7-day chart, you will see some serious up moves or pull back from those 36, 37 odd levels. Siddharth, are you guys recommending anything in telecom between the two, Vodafone Idea or Bharti? And particularly if you have a view on Vodafone Idea?
None of them, Neeraj, because both the stocks are service providers, and we still believe there is a lot of pressure which will be mounted further. But if I talk about Bharti again want to come out of the African operations. ARPUs are not coming that well. In fact, Indian operations are tad better than what African operation is overall doing. And in Vodafone Idea again, big losses are there mounting up. we are not positive on any of the telecom service providers. Let's be very frank with you, Neeraj. I think some of the companies in the same space, likes of companies which provide optic fiber, companies like Sterlite Technology, which has a whole host of scope of providing their optic fiber for 5G network, worldwide 5G network. India is also there to roll out in very soon, maybe in a year or two. So 5G network, back on that, a service provider and an enabling factor, Sterlite Technology kind of companies which we like. We have a coverage on the same, and we have a target of 425 with Sterlite Technology, and we are quite confident. And let's not forget, results were outstanding, and on top of it, the order book was best ever order book which Sterlite Technology has bagged.
Okay. What's the view on Kesoram? Do you track that stock?
No, Neeraj, we don't track Kesoram.
Okay, well, but big moves there actually. Let me try my luck with the charts, and if indeed any of those stocks are being tracked, because they're trading really well. Ruchit, either of the names, Vodafone Idea or Kesoram?
I think Kesoram, although today we had seen an up move of 20%, but if I see last 1.5 years, the prices have continuously declined without any meaningful pullback moves. So I think this is just one of a pullback move, one can say. Yes, the stock is on the upper circuit and good volumes are there, so we can see this up move getting extended further up to its 200 DMA, which is placed in the range of 85 to 88. So if the stock comes around 85 to 88, I think if any existing long positions are there, they should look to exit from this stock rather than taking a fresh entry at current levels. And as far as Vodafone Idea is there, yes, last 2-3 trading sessions, the up move has been supported by good volumes. In fact, we had seen good volumes during last week in both the names, that is Vodafone as well as Bharti. We expect some more up move in the short term. Vodafone could extend this uptrend up to this pullback move towards 49 or 50 kind of levels, whereas Bharti we could see another 8 to 9% up move from current levels, which should take the stock towards its 200 DM at 360. So from a trading perspective, if we get any minor dips around 320, 318 kind of range in Bharti Airtel, that could be used as a buying opportunity for short-term trading, keeping stock below 300 for target around 360.
Got that. Gaurav, Bissa, anything in the last half an hour of trade that's particularly caught your attention?
One stock that looks exceedingly well is Tata Power, but I would not recommend buying here. It's giving good closing. Risk traders can have a stop loss of 76.50, 76.70, buy for targets of 80, 80.5. And if it gives a close above levels of 79, we can expect an inverse head and shoulder breakout on daily charts. The volume has been good so far. The participation in the future segment also been quite interesting. So a close above 79 can take it towards a level of 87, 88. That would be a position target. But for 1 or 2 days, one can keep a stop loss of 76, half play for targets of 80.
Okay. Well, a couple of minutes from now, actually, and in fact, let's get them in right now. We should try and get a sense of what dealing rooms are recommending in the session today as well. I must say, when I scan the list for stocks that have just inched up in the last 15 minutes, there's hardly any movement happening within the Nifty or the Nifty 500. To be honest, 1.5% in terms of stocks which have gained in the last 14 or 15 minutes of trade. So not too much there, but maybe dealing rooms have some ideas. So let's get in Darshan Mehta and Yatin Mota with their channel checks. Both of you, good afternoon. Darshan, let's start off with you first.
Yeah, so a large block deal was seen today in ICICI Bank. What dealing rooms do indicate that it was a large FII fund who has been selling, and majority of the selling that had to happen is over in ICICI Bank. So it's an American fund which was the seller. So that's what's been spoken about in ICICI Bank. The other one is Bajaj Finance, in which there is traction on the positive side. Some of the domestic mutual funds are actively accumulating. There are fund flows in this side. And the last one is Vodafone Idea, in which some of the HNIs are very, very active in trade. It has moved from levels of 40 to almost 44.5 right now, but there is traction that's been seen, and it's moved on decent volumes today. But Yatin, what are you hearing?
Well, HCL Technologies, that is one stock wherein dealers are indicating that there are sell flows in general as far as large cap IT is concerned, and we are looking at fresh shorts and long unwinding both happening simultaneously. As far as IT is concerned, 2.5% down for that one on decent volumes. Apart from that, Dalmia Bharat is one stock wherein dealers are indicating that domestic funds are set to be buyers here, 4% up for that one, and dealers do expect the uptrend to continue. And finally, we have SBI also, wherein dealers are recommending a BTST kind of a strategy.
All right, Yatin, thanks a lot for that. So those are some stocks to keep an eye out on. Exide Industries for one is up about 5%. You've got DLF, which is up 4.5%. IRB Infra, L&T Financial Holdings is up 3.5% to 4%. Walkhard is up 3.5%. L&T Finance, Ruchit, for you, last 1 month stocks up 15%.
Yeah, so from the recent lows of 110, we had seen a pullback move up to 138, 139, and then last 2 weeks there has been a consolidation phase. So I think tomorrow's session would be quite important for the stock, because today, although the stock is above up by around 3.5%, the breakout is placed above 139. So if we see a follow-up move above 139 tomorrow, then this would open for a further up moves towards 146, 147 in maybe till this expiry itself. So one has to watch out tomorrow's trading session for L&T Finance Holding for short-term perspective. If there is a breakout above 139, look to enter longs only from this expiry point of view for targets around 145.
Siddharth, let's talk a little bit more about the sudden interest that's building up in some of these cap good names and utilities. You have seen an L&T, obviously, that one remaining strong, but a CNG consumer, that is another one that you need to watch out for, particularly from the electrical space. But ABB, Thermax, are these the kind of names that you're going to be watching out for closely in the near term?
Of course, consumer goods, capital goods data has been coming strong if you talk about on a month-on-month basis, and that has been reflected in the numbers also if you talk about Siemens or L&T for that matter, and other Thermax, of course. But still, I would like to go with the biggest of the play, infra, capital goods all together, that is L&T. And we still are very positive on L&T with a target of 1894. Strong numbers. Management is still continuing with the revenue growth as well as the order book growth going forward, and the biggest thing is some of the export orders execution has been coming better. We have already the buyback is over, force 1475, but I think there are more legs to L&T from here on, because we have elections in front of us next year also. But I would say infra will play a major role in this elections, and L&T will be the key player for 2019.
We have a query, Siddharth, on NTPC as well. I mean, looking at factors that probably could lead to some more interest coming into the stock. Power demand growth stands at about 6.5% year to date on a year-on-year basis. The government is, focused 100% on the electrification drive, which will lead to a growth in the industry. And the company is well placed for inorganic growth opportunities as well, has a huge cash build up on the books. Would you recommend some interest in NTPC?
Well, let me put across in this way. L&T is a very slow mover. And if somebody is looking to invest in NTPC with maybe with a 1 year odd perspective, I think it's a too short a period to invest in. I think 3-5 years would be a decent period. It's a slow mover. Again, power gencos, we are not that positive, and we believe NTPC with a capped ROEs, I don't think there would be a great performance which will be delivered. I think in fact in the same space, if somebody looks out for transmission companies like something of Kalpataru Power, good order book from railways, from other places, and transmission orders are there. I think those plays, transmission and distribution plays, are better than generation companies, I would say.
Okay. Well, let's get in closing strategies from our experts. 10 minutes to go before we shut shop. Let me start off with you, Gaurav, your top closing strategy.
Well, as far as the stocks are concerned, as I mentioned earlier, that Cipla is looking interesting. It's a safer bet compared to many of the other mid-cap names. So one can keep a stop of 515, targets of 540, and for Nifty, selling 10,500 put option would make more sense.
What about you, Ruchit? Your top closing strategy?
From a BTST perspective, I would recommend buying Titan at current levels. Now, this has been one of the outperforming stocks since last 3 or 4 weeks. And after a consolidation of about 2 to 3 trading sessions, the price move is indicating again resumption of the uptrend. So only from a BTST, one can go long on Titan at current levels with stop below 910, expecting target in the range of 950 to 955 tomorrow.
Siddharth, are you looking closely at some PSU banks? I mean, taking a look specifically on a stock like Union Bank, despite what the rest of the other PSU banks have been doing, this one continuously seems to be holding ground or even doing better than that. Last 1 month, the stock has given returns of closer to 30%. Would this sector as a whole be a big no-no for you, or you look at it selectively, look at specific stocks, specific banks thereof?
Well, Devina, let me put it this way. I would be very selective in the PSU banking space in particular. Of course, SBI being the leader can be one of the plays. I think Indian Bank, who is posting good set of numbers, I think can be another play in PSU banking space. Union Bank, as you rightly pointed out, has given strong returns on the back of good numbers. But I would still like to avoid all these things. I would still put my neck out and be invested in some of the private banking space, likes of HDFC Bank, which we are very positive on, and in fact it has a natural edge and natural beneficiary apart from the numbers which it delivers. Edge is of course the kind of squeezed liquidity in the PSU banking space, along with the saga of NBFC credit crunch which is just going on. I think that would be a big beneficiary for private banking, especially HDFC Bank, who has strong CASA. So HDFC is the key play for us with a target of 2420.
Okay, Siddharth, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us those thoughts. Really appreciate your time.
Thank you.
Looking at the large cap names, there's a bit of a bounce in a couple of names like UPL as well as Grasim. So if I look at the index, and these two names have stood out and trading around or at the highest point of the day. A bit of a bounce in UPL after the little pullback yesterday or day before. Gaurav, comment on this one. Has done remarkably well in the last 1 month. Showed a bit of a pullback yesterday and again bouncing back today. How do you trade UPL?
It's very dicey trade. It's been on a tear for last couple of weeks at least, and it has an immediate hurdle at levels of 795, 800. So for me, I would give it some more time. For people who already bought, can keep a trailing stop loss of 770, play for targets of 795. For me, I would avoid and give it some more time. There are some other technical patterns that are working against the name. There is a possibility that if 780 is not sustained, we can slip towards 740 again. So I would give it one more time. But for people who already bought, they can hold it trailing stop loss. Fresh entry, I'm not too sure.
Exide, Ruchit, on the charts, 5% higher today.
So there has been no correction in last few days, but the 200-day moving average has acted as a good support. It has been breached for 1 or 2 trading sessions, but again, if I see some historical data, then 235, 240 has become a very strong support range now. So till the stock is trading above this 235 support, there is a probability of a bounce back towards 270. So if any existing long positions are there, they should continue to hold. Even fresh longs could be done with stop below 235 in Exide.
Right. The other one is Siemens. Should pull that stock up 916 on the stock price. A really good set of numbers. At least the revenue growth numbers really is one of the highest in multiple quarters. The stock though did not react as the numbers showed up, but whether or not those had already been baked in is something that we need to have a look at. But the stock post the numbers has seen a considerable decline, almost about 10% knocked off, including today's cuts that have come in. Would you trade a Siemens at these levels, Ruchit?
Not really, as you said that in spite of the good news, we have not seen any kind of buying momentum coming in the stock, and 995, 1000 is a major resistance which has not been crossed since second half of September. So I would wait for a breakout above 1000 rupees before taking any entry into Siemens.
What's happening in Emphasis? The stock has been on a continuous grind low downwards, and had reached, obviously was at 885 just a few moments back. Now it's climbed back above 900. But the fall from those 1150, 1200 levels till where it's trading at has been uninterrupted. We've not seen the stock actually even give any meaningful bounce back in order for people to get out of the trade if they had indeed taken one. Gaurav, what would you do with emphasis?
People have already bought, I think, keep a strict stop loss of 890. The pattern is quite weak. It has broken all the major averages. We already seen a bearish crossover between 50 and 100 DMA. On the verge of seeing a 50 and 200 DMA crossover, bearish crossover. It might take 2 or 3 days. For me, I would say totally avoid. If somebody has bought, keep a trailing stop, keep a strict stop loss of 890. But apart from that, I would not be too interested in buying fresh.
Okay. One last question before we start wrapping up the markets, Ruchit, and that's on RT Industries. It might be a bit of a lull today, but stock nudging those 52-week highs or life highs. What does one do here from a positional perspective?
So, in spite of the mid-cap index being down from its all-time high quite significantly, RT Industries is one of the stock which is trading at its all-time high. The momentum readings on the monthly chart, if I look at some long-term charts, then are indicating that the upside could continue going ahead. So, no signs of reversal. Good volumes in last 2 weeks in spite of stock trading near its all-time high. So, these are all positive signs. Any long position should continue to be held on with a revised stop loss methodology. 1400 would become a now very strong support. And as per reciprocal retracement theory, 1650, 1660 could be seen in short term.
Okay, let's start wrapping up the markets. The Nifty and the Sensex haven't had the best of days today, but we are off the lows of the day, if that means anything. The Nifty Bank, 148 points in the green. Again, not at the highest point of the day, but still doing reasonably okay for itself. What about the mid caps and the small cap indices? Will come up on your screen. Remember the market breadth, even Stevens, no big crashes or otherwise, but 0.5% in the green for both the mid cap and the small cap indices. So it's not been a bad day of trade for the mid caps and the small caps, but the large caps in particular had a bit of a stick in the session today. But let's talk about the key movers and shakers on the Nifty, and then Devin, I'll bring you up to speed with what's happening in the mid caps and the small caps. Reddy 6.5, Grasim 3.5. Yes, Bank has had some gains, about 3.5% odd. Bajaj Finserv about 3%. UPL about 3%, Axis Bank 2.5%, Bajaj Finance a couple of percentage points higher, so not bad going. On the losing side, it's all about IT, TCS, Infosys, Tech Mahindra and HCL Tech and Wipro, actually all five, almost, 5 out of 6 top losers are the IT names. And then Bajaj Auto, yet another exporter which is corrected a bit. Reliance Industries about a couple of percentage points, that too is trading marginally off. But Devina, what about the mid caps and the small caps? They've had a slightly better performance than what the large caps have had.
Most definitely, Neeraj, and 0.5% gain on a day where the indices have lost closer to 0.5% is relatively good. So you've got specific stocks to watch out for. Exide Industries being one. The stock's doing well. By the end of the session this afternoon should close closer to 5% higher. There has been interest in more high beta names in the real estate / infrastructure names as well. So DLF does well. IRB Infrastructure does well. Dewan Housing Finance at one point was up about 5% may not probably close near those levels, but nonetheless a very good set of numbers, close to 438 crores in terms of the profitability. You had a good 33% jump in revenues as well, and the stock was rewarded. Kansai Nerolac, so this is crude coming off and the beneficiaries of that. So Kansai Nerolac up about 3.5% from the aviation pack. You have Jet Airways doing well. Berger Paints is the other one from the paint space that does okay for itself this afternoon. Union Bank, 1 month the stock has moved up closer to 30%. So probably stock specific in the PSU banking lot. The stock is up today as well, 2.5 to 3% higher. Wockhardt, Ajanta Pharma and Biocon from the pharma space doing okay for themselves. Amongst the losers, ICICI not so good. The stock trades under in the session this afternoon. Jubilant Life and the mid-cap IT names, all of them have witnessed heavy cuts. So Persistent is down, Emphasis is down, Tata Elxsi is down. So these are just a few names that have lost ground along with the larger IT names. Siemens loses again, so 1.5 to 2% losses coming there. Adani Power down and NMDC is another name that has lost considerable ground in the last 3 to 4 trading sessions post the issue of the Karnataka government saying that they might look at rebidding of the Dolamalai plant, though later on there were clarifications, but the stock didn't really respond to that. So that's the market wrap out. Mid caps and small caps outperforming benchmark indices.
Yep. Let's see, but the crude price cool off didn't quite aid the momentum. We would have hoped that after yesterday's fall we would pick up, but not quite there. The banks though have done really well, and we probably do better than what the world markets are doing. The market breadth, I would believe even Stevens are marginally in favor of the declines, if you will. No, actually marginally in favor of the advances. Yeah. That's interesting.
Towards the end, actually, that's what the mid-cap index was up about 0.5%. But let's take a quick look at the turnover numbers and see how that shapes up in today's session. High on the turnover, so that's encouraging. That's probably a little bit disappointing from an index point of view, but broader markets obviously an encouraging number there. 9,32,000 on the futures and options side. Cash markets still lagging average.
That would be interesting to see if FIs have sold today as well. After a string of positive gains, yesterday was the first sell number. Let's see what happens today. The contributors will come up on your screen. And IT would be on this side. Yes, TCS and Infosys featuring out here. Power Grid, the top loser as well, correcting a bit. And Reliance, naturally so by virtue of the weightage that it has, the top contributor on the losing side.
Dr. Reddy is the top gainer though, but not in terms of points. Because of its weightage, adding just close to 5 points. Bajaj Finance doing okay, and Yes Bank recovering a little bit after the sell-off in yesterday's session, but still not adding up as much in terms of giving that kind of a fillip to the index.
Yeah, that's true. But, well, let's wrap out the markets and take in final thoughts from our experts. Gaurav, I'll start off with you this time. In light of what's happened today, what would an optimal level be for the market, for the Nifty or the Nifty Bank over the course of the next 3 or 4 sessions?
For next 3 or 4 sessions, there's going to be a good amount of resistance at level of 10,727.40 on the spot side. Supports are likely to be seen at levels of 10,540. For next few trading sessions, the strategy should be to buy Nifty towards the level of 10,560, 570, stop loss of 10,540, and play for 100 points jump. For Bank Nifty, buy only and only if it sustains level of 26,350, or you buy on any dip towards the level of 26,100.
Okay. What about you, Ruchit?
So Neeraj, from the expiry day, we have already seen an up move in this series in Nifty by about 700 points from the lows of around 10,000 to 10,700. We had also earlier discussed how 10,750, 10,800 is a major resistance considering the 200-day moving average and the gap area that was seen in the month of October. So I think now after this up move of 700 points, the rest of the series would be quite range bound in terms of indices, at least the Nifty index. So 10,550 to 10,750, these 200, 250 points range could be seen till expiry. So I'm not expecting any significant momentum on the index front till expiry. Traders should focus more on stock specific strategies, and in case if they have to trade index, then as I've recommended earlier, you buy Nifty at lower levels around 10,600 and sell higher strike price call options that which fetch in premium.
Got that. We leave it at that, gentlemen. Thanks very much to Gaurav, Bissa as well as Ruchit, Jain. Appreciate you sharing your thoughts on our platform. All right, and with that, it's a wrap on this edition of Countdown. Thanks a lot for watching. From Neeraj, myself, and the entire team, let's put the show together.